All right, guys, so we're going to start off with a refresher on data collection, meaning how to actually collect the data, how to input it into your journal, what to do with it, how to analyze it, how to break it down, and so on. So I have an example of a journal from a trader, one trader that I personally mentored. And this was the initial journal that he has submitted for me to review, right? So I'm gonna break it down with you together. I'm gonna have a look at the raw data and try to break it down as much as I can and pull insights out of that information that we can later backtest or review when we start digging into the actual trade review section, which is lesson number 2, right? But in this lesson, I'll literally just look at the data from the spreadsheet, from the journal, and try to break it down, right? Try to pull as much information, as much knowledge as possible, and then later analyze it when we're actually digging into the trade reviews to see where the actual lessons are. All right, so again, this is a journal example from one trader. When we look at it here, the first thing that we're gonna see is it's a pretty simple journal, right? And this is literally all that you require. And first thing that we can see here on the left-hand side, right, we have just normal basic statistics. Portfolio gain, 18%. This is pretty good. So this is a journal from 2019 going from about January 2019 to end of September 2019. So we have a good about 9 months or so worth of data. So again, we have portfolio gain 18% during that period of time. Not bad, right? That's pretty good. I mean, that is beating the S&P 500 average. So this is, to a lot of people, may not seem like a great return, but this is actually a really, really good return that, you know, a lot of people would be extremely, extremely happy with. But from a trading point of view, as we'll go through this, you'll see that there's still little tweaks, little improvements that we can do. But the 18% over a 9-month period, when we literally simply look at the numbers, that is averaging 2% per month. Not bad, right? Pretty good. But if you want to go up to a 5% per month mark or average, or even from that 5 to 10% per month average, there has to be tweaks that need to be done, right? But I just want to stress this: 18% or 2% per month is amazing. You will not get that at a bank, right? You will not get that by simply investing in the S&P 500, because the long-term average is nowhere close to 18%, right? So again, I just want to stress, it's good data, right? It is good performance, but it has improvement. So when we look at it farther, right, 18% return, number of trades 42 during that period of time, not bad. So that is averaging roughly 4.6 trades a month, right? It is good, but for a day trader, it might be a little bit low, right? So that's the first point of analysis. That's the first little data that we can pull out of it, right? If this person is an actual day trader, a day trader will typically take more than 5 trades a month, right? 5 trades a month is kind of what a swing trader would be focusing on, right? But from a day trading point of view, you can be a little bit more active. You can go up to that 10 trades a month range and kind of average out around 10, 8, 12, right? Going past 12, a lot of times it will become over trading. But if you can stay like between the 8 to 12 range, that is pretty good. So this trader is just under 5 trades average per month, which for a day trader, it is kind of low, which tells me one thing: that there's missed opportunities, right? That there's missed opportunities that could have been potentially taken to increase the overall profit, right? So that's the first little insight. Number 2, we have the break even, right? So it's important to collect this information as well, how many break even trades that we have, because obviously if there's a break even position, what you can do with a break even information is that obviously those are potential trades that were, 1, mismanaged, 2, shouldn't have been taken, right? Either one of those, or 3, it was just a good trade, good management, everything went as planned, right? So if it's number 3, perfect. If it was just good management, everything went as planned, no issues there, right? But if it was the trade that potentially should have been taken, right, because of other issues, analysis that was missed, negative confluence factors that were missed, then obviously the break-even information is important, because that means you bulletproof your position, but it didn't work out. It still went out to close you out for break-even, right? So obviously within those trades, there could be something that could be found, right? Now the next thing is number of losers. So we have 18 losing trades and we have 20 winning trades. Not bad, right? It's a win ratio of 52%, just over 52% win ratio, which is good, right? You can do a lot with a 52% win ratio, but if you're averaging, 1% per trade on average, then that's not that good, because that means that you pretty much you're gonna have to be taking a lot of positions to actually make profit, because 50% of the time you will have a loser, meaning 1% loss, and 50% of the time you will have a win, 1% win. So in this case, you will just be a little bit in profit. If your average of 2-to-1 per trade, obviously a 50% win ratio or strike rate is amazing if you can average roughly 2% per trade or 1.5 per trade or so on, right? So anyway, the win ratio is good. As we go through the information, as we go through the review process, the win ratio will go up, because there'll be lessons that would be pulled out of this information, right? That can potentially fine-tune this trading plan and therefore increase the win ratio, right? So when we dig into this data a little bit more, we have 20 wins, right? 20 wins, 18% gain, right? So 20 wins, 18% gain. So pretty much on average, that's about just under 1% per trade, right? So 0.9% per trade, that's kind of what we're getting here, right? So literally, if you take 0.9% times 20, it ends up being 18%, right? So we're below the 1%, right? 1% per trade. We're slightly below. We're at 0.9. So every winning trade averages out at 0.9%, which is not bad, right? It's not bad, but that again could be improved. So that's a management thing potentially, right? Because we want to pull a little bit more profit out of the positions. Now, in total, when we look at 42 positions, 42 trades, right? So if you literally take 42 divided by 18, or 18 divided by 42, the other way around. So you take 18, the actual percentage, and divide it by the number of trades, then your average win for the amount of trades that you take is 42, or 0.42%, right? So 0.42% is the average per trade taken, win or loss, which again is a little bit low. It can be improved slightly. So that's kind of just simple basic information that doesn't really give us much. It just gives us potential clues of where we should be focusing, where we should be reviewing. So for this trader, as an example, one of the first major clues is the number of trades taken, right, as a day trader. This trader averages less than 5 trades per month as a day trader. That is pretty much swing trader category, right? Day trader, around 10. 10 is a really good average for a day trader of number of trades taken per month, right? But if this person is a swing trader, then that's totally perfect. That is a great number of trades. 5% average is great for a swing trader. But that's the first potential area of improvement. Number 2 is increasing the win ratio, right? So the strike rate, the win ratio, can we increase that a little bit, right? And number 3, can we increase the average percent win per trade, right, to above 1%, right? So can we get the average win to be above 1% to increase the general portfolio gain? So that's just the information that you can get from simple data like that, right? You don't need much, but right away from that, you can just right away start to see where you can improve. Now, when you actually dig into the spreadsheet, this is where we have all the information. We have every single strategy, right? So let's look at the actual data field. So symbol, meaning the pair or the ticker symbol if it's equities, right? So which currency, which pair, which equities or stock are you trading and so on. That's important. You need the long, short. That's important. You need to list the strategy. That's important as well. Management rule. This is a little bit different. This is something that the trader uses. So you can remove that, or management rule can be, is this a wave 1 run? Is this a wave 3 run? Is this a wave 5 run? Is this a wave 2 pullback? Is this a wave 4 pullback? This is just a different view of breaking down the same type of information based on the LA wave theory. Then we have the stop protection. This is good information as well, to kind of have your stop protection, exactly where you had your stop loss, right? I highly recommend having that in your journal, right? It can help. You can even have your target placement, right? Where did you have your target, right? But either way, for stop placement, IBOA, 0.618 Fibonacci. Pretty good, right? But I personally found, right? So this is the first little potential fix, because I personally found that an IBO, doesn't matter whether it's an IBOA, IBOB, IBOC, I found that an IBO should have its stop loss at 0.75. This is based on backtesting data, right? Based on my backtesting data. So I found that an IBO, the most optimal stop loss is 0.75 Fibonacci, not 0.618. This trade was a loss. One quick insight from just pulling this information. But what I'm going to do is just filter, right? Filter this based on the strategy, based on the trade. So I have all the ABOs here to really start off here. And right away we can see that we have taken 14 ABOs. This trader has taken 14 ABOs during that period of time, and the return on those ABOs was just under 5%. Not bad, right? But again, that could be slightly improved, and we'll have a look at that in a second, right? The next strategy that we have here is CBOs, okay? But we have only taken 6 CBOs. Profit return on these CBOs is 5.32%. So right away, you can see that there's a difference here, right? ABOs, I believe there were 14 ABOs, if I'm not mistaken, right? So we have 14 ABOs for just under 5%, right? And only 6 CBOs for just over 5%, right? So we can see that 6 CBOs, that is quite a low number, first of all, right? And the reason being is that CBOs is the strategy that should have the highest strike rate, right? Simply because it has the most confluence factors, it has the most development, and so on. So this strategy, the CBO strategy, should typically have the highest strike rate and should be one of the strategies that the trader executes the most, right? Because it's the most developed. Therefore, the trader should have the most confidence in executing a CBO versus an ABO, right? So in my opinion, the CBO statistics, there should be more CBO trades. The CBO trades typically should be roughly the same as IBOs. Roughly the same number of trades for CBO than an IBO. That's just something that I found throughout my journey. So that's one of the first things that you can kind of pull out of this information. You can already see that we have taken 6 CBOs, and the CBOs returned a profit of just over 6%. Not bad. That is, or just under 6%. So that's not bad, but that is just pretty much, again, under 1% per trade on average. We need to increase that slightly higher potentially to actually, again, that was one of the issues, is the average return per trade was under 1%, right? We need to increase that to above 1%. So CBOs, good return, but we need to increase it to above 1%. Now, the ABO strategy, this is where the main issue comes in, because the ABO strategy, we have 14 trades, but out of those 14 trades, the trader has only made 4.9%. So the average win per trade there is not that high, right? Again, we need to increase that a little bit more, because 14 trades for 5% might not necessarily be worth it, right? So that strike rate could go up potentially a little bit more, and the average win per trade, again, there's a slight issue there. Now, if we continue going farther, then we have IBOs, and just a lot of IBOs here, right? A bunch of different IBOs, total of 22 IBOs, which is, in my opinion, a good number of IBO setups. And we have 8% profit on the IBO. So in general, every single strategy here is profitable, right, for this trader, which is important. Every single strategy is profitable. However, they could still be tweaked slightly, potentially. The ABO is profitable, and we can look at the trader's performance here, which, sorry for the white background. But again, you can see that when we start looking at this information here as an example, this is a really good journal. It's simple. Let me just quickly show you what this trader has. It has yearly analysis, quarterly analysis, which isn't fully complete. We have monthly analysis that, again, isn't fully complete just because the data goes up to September. We have weekly analysis, and then we have strategy analysis. So this is pretty much based on pulling the data from the initial spreadsheet, right? This is based on that data. So you just take that data and you categorize it differently, right? You can categorize it by yearly, number of trades closed, break even, losses, winners, win rate, percentage. This is just the simplest data that you can collect. Yearly, quarterly, monthly, number of trades, how many break evens, how many losses, how many wins, the win rate or the strike rate, and the P&L, right? This is the basic data. Everybody should be collecting this information, right? Then we have weekly analysis. This is good too. It's not really required, but it's good, right? It kind of shows you roughly how many how many trades on average you take per week, and so on. And this is really the important information. This is strategy specific data. So again, it's pulling the same information from the main spreadsheet and categorizing it based on the strategy, right? So when we look at the ABO, again, 14 trades, 3 break even, 6 losers, 5 wins. Win rate, 45%. This needs to go higher, right? ABO win rate, an ABO, when really taken with precision, and that's it. When you literally focus, your main focus for ABOs is precision, perfection, right? No doubt. If you have no doubt in that ABO and you really have everything that you require, ABO strike rate can go quite high. The ABO strike rate can go up to 70%, right? You can definitely hit a 70% strike rate on ABO if you're very, very selective and if you have all the required criteria, momentum, candlestick formation, major support levels, and so on, right? If you have all the required criteria, the ABO strategy, the strike rate can go up past 50, and even past 60, and even past 70% if you're really good, right? And yeah, so that's the first little thing here. The strike rate, the win rate on ABOs is below 50. It can be increased, right? It can be made better. And P&L for the number of trades taken, again, could be increased a little bit, but it's good because guess what? This strike rate is below 50%. This trader still made 5% profit. Again, it's good because this trader is profitable. He made 5% trading the ABO strategy. If he did not trade the ABO strategy, he will be 5% less, right? So he's still doing really well with performance in general. IBO A, strike rate 40%. Potential issue there, right? Simply because an IBO A has typically the highest strike rate, simply because it has, out of all the IBOs, you should have the highest strike rate out of all the IBOs because it has the most development, right? It has that 4-hour trend confirmation, whereas an IBO B or an IBO C does not, right? So the IBO A has the 4-hour development as a day trade. So the strike rate on that should typically be a little bit higher. But again, it could really depend on a year and so on. But again, this is where I would kind of dig farther into. and potential IBOA setup, see what's wrong there. And one of the first issues that I did notice with an IBO is that this IBO was a loss, or where was it? If we go back, yeah. So if we go back, IBOA, this IBO was a loss. Stop loss was at 0.618 Fibonacci. It could potentially have been fixed if the stop loss was at 0.75. And right away, we can see some inconsistency here. First trade IBOA was at 0.618. Second IBOA was at 0.75, 0.75, 0.75, 0.75, 0.75. Okay, so this trader did end up switching his stop loss to 0.75 on IBOAs. So that was just a one-off. So that's definitely not the issue. So that's something to dig further into. IBOBs, right? So again, so IBOA, one issue, strike rate. Second issue, percentage return, right? And IBOA, typically, right, if you're catching with the trend, if you're taking an IBO with the trend, you're typically looking at 3% minimum a lot of the times, right? So with the daily trend, I mean. So if you're taking an IBOA with the daily trend, it should be about 3% minimum. And that is, again, a potential fix, something to look into. IBOB, good statistics, I would say, on the IBOB. IBOB has a 70% win rate, 75% win rate, which is great. That is amazing. That is a really good win rate. A trades, 5% profit. So again, that potentially could go up slightly higher because obviously we don't have any big trades there. If it's 8 trades, 2 losers, 6 wins, 5% profit. So again, based on the wins, we're under 1%, right? 6 wins, 5% profit, we are under 1% per trade, per win on average. This should go up slightly, right? So that is based on target placement. So that is a potential target placement issue, potential management issue. IBOC, we have 4 trades, 1 break even, 2 losses, 1 win, right? 33% strike rate, 1.8% profit, right? So bad strike rate, 33%, still in profit. Why? Because one criteria, IBOC, and I'm sure this trader follows it, and IBOC requires a minimum of a 2-to-1 strike rate, or 2-to-1 reward to risk ratio. The higher your reward risk ratio, the lower the strike rate can be, right? So if you have a high reward risk ratio of 2-to-1 or 3-to-1 on average, you can have a low strike rate below 50%, 40%, 30%, still be profitable because your reward to risk ratio is higher than 1-to-1. If your reward risk ratio is 1-to-1 and you have a 50% strike rate, you're not really going to be making a lot of profit, right? So if you increase your average reward per trade, right, you can keep your win rate the same. Your win rate can even drop and you will still be profitable, right? So that's something to think about. And CBO statistics, good win rate on CBO, 66.6%. Not many trades though. 6 trades, 2 losers, 4 wins, 5% profit. This is not bad. Don't really have anything wrong to say with this analysis here. This is good because the profit is actually above 1% per win, right? So every winning trade has a average return of over 1% with that P&L here. So CBO is pretty good. The only issue that I had with CBOs is that because it is the strategy that typically has the highest performance, this trader doesn't take that many positions, right? Only 6 compared to, I believe it was 22 IBOs and 14 ABOs. So that is one fix. That's kind of it, right? That's literally kind of it. So we pull a bunch of little insights. So as you kind of do this for yourself, you saw that I went through many different things. First, I looked at the actual simple overall portfolio figures, such as the portfolio gain of 18%, number of trades, break even, losers, wins, win rate, and kind of trying to gauge a picture of where this person or this trader falls within his own kind of performance, what kind of information we can pull from that. So again, number of trades, what is the average trades per month taken, does the portfolio gain kind of reflect that really well, and so on, right? Then when you're looking at the general spreadsheet here, again, you can pull various type of information, specifically when you search or categorize all the strategies together. You start to really pull the information and really try to break it down with the statistics, which that was really well done within this section here. So the trader has put everything together within this little category for ABOs, IBOs, and CBOs. So I really like that. And again, you can pull some information out of it, just like we did here. And then it's good to have the stop protection written down. It could also be a good rule to, or data to collect, is to have the target placement also written down, just so again, as you're reviewing your performance, you might notice that, hey, this can be changed, this can be improved a little bit. That's kind of it, right? That's kind of all the data that we can pull out of this. I mean, we can go get much more advanced by looking at various performance metrics, but this is really the basics that will go really, really far if you really try to pull as much information out of a journal. Because remember, a journal review, collecting data information like that within a spreadsheet, within a journal, is not for you just to have a track record. It's great, right? Because everything's categorized, you can see your stats and your data, but it's what you do with that information, what you do with that data. Because a lot of traders, they just do it, don't look at it again until next week or next month when they're inputting their trades, but don't really analyze it. Right? So the important thing is analyzing it, trying to pull as much information as you want out of it. And I mean, if I spend a few hours on this journal, really just sitting down, writing things down, doing various calculations and so on, which this trader already did, majority of the work, right, here by collecting that data, I mean, then at that point you can really try to get fancy and try to make potential suggestions, right, for improvement. Now, the reason why I said suggestions is because you're actually going to have to look at the actual position, the screenshot, or the actual chart of that position to see if there actually is an improvement to be made. Data without the visual gives you just a fragment of the information. Data with a visual, with a screenshot, now you have a whole picture, right? You have the whole general picture of your entire performance because of the data and the spreadsheet that gives you your entire performance, right? And the screenshot, right, for the actual trade is really important when you're actually going to see if there's a fix to be made, right? So the next lesson, we're going to be digging into the screenshots. That is part 2. So whenever you're collecting information for your trade, for your trades, whenever you're journaling, make sure you have a spreadsheet, and make sure you're also collecting screenshots in either within a spreadsheet or in a separate note app like Evernote or Bear or any other note app on your computer. If you just collect the screenshots, take some notes, then you're good to go for data collection and journaling, right? So that is that for this first lesson, data collection. That's the type of information that you can pull from a journal like this, right? It's just basic. And then the next step, step number 2, the next lesson, we're going to be digging into the actual trades. One by one, we're going to be looking at these positions and seeing what can be changed, what can be improved, what kind of negative confluence factors were missed, and what was actually good about those positions as well. So that is it for this lesson. I hope you guys enjoyed it. Let's have a look at the next one.